Ladies and gentlemen, welcome to this week's version of Nichols and Dimes, our weekly video series. I'm in the office on a Saturday. Why? Because it is really quiet and I tend to get a lot more work done on Saturdays. And obviously with everything that's going on with effectively a shutdown of the economy and the markets continuing to implode, I thought I'd get some work done and share some information with you. So the quote of the week this week comes from a guy we quote all the time, Warren Buffett. Why? Because he's one of the most successful investors of all time, and we can learn a lot from him. In one of his letters to his shareholders back in 1986, Warren Buffett wrote, amongst other things, the timing of these epidemics, again, this is back in 1986, the timing of these epidemics will be unpredictable, and the market aberrations produced by them will be equally unpredictable, both as to duration and degree. Therefore, we never try to anticipate the arrival or departure of either disease. But our goal is to be more modest. Here is what's really powerful. We simply attempt to be fearful when others are greedy and to be greedy only when others are fearful. And that last part of that quote is very powerful. So again, I'll read it again. We simply attempt to be fearful when others are greedy and to be greedy when others are fearful. So greedy when others are fearful, what he's really saying is there's opportunities in the market in terms of specifically stocks or stock markets because things have been, have come down a lot. So in other words, stocks generally at a discount right now. If you have a long-term time horizon, maybe you consider investing now. Or if you are considering investing, maybe now is not the perfect time. It's too early to tell. But maybe you start identifying stocks that you may want to come into because, we have an unclear, at least short-term future, but obviously the markets will recover. This great country and this great people will recover. I have no doubt about that. I wanted to relate something to you, at least let you know about it. Our team wrote a great report, Coronavirus and the Markets. So it's on our website at nicholswealth.com. They did a great job putting the piece together. And one of the things that people sometimes ask is, even though the past does help us get more clear picture of the future, is how long do bear markets last? So in other words, how long is this going to last? Obviously, no one knows, at least as of this date. I'm recording this, let's say mid to late March. But how long do bear markets last? On average, they last 15 to 17 months. So again, a bear market is a decline of an indices. So for example, the S&P 500 from a high of 20% down. So how long does this last? We have no idea, but based on history, bear markets last 15 to 17 months. Also, I want to note that about a month ago, I shared with you the history of pandemics in the country, and generally, historically, the market, on average, over a 6 to 12 month period has recovered. Now, those pandemics didn't really negatively affect the economy. This one is a lot different because obviously the economy is shutting down. So we don't really know what the long-term negative effects are of this coronavirus. Obviously things are challenging, but we need to stay strong. We need to make sure we have reserves in place, cash reserves, obviously food and all that stuff. We'll get through this. To that end, if you would like a second opinion on your portfolio or financial situation, you could send me an email at cnichols@nicholswealth.com or go on our website at nicholswealth.com to learn more. If you are uncertain, if you are fearful about your economic situation, your financials, your portfolio, do not sit there and do nothing. Get a second opinion, whether it's with us or another firm. Take care. Thanks for watching. Bye-bye.